in terms of revenue, maybe tell us a little bit more how last year was. How many watches did you sell, and what are the metrics, looking like for this year?
So we are selling roughly 250,000 watches a year at Breitling. The market was actually very good for us. The US was growing very strongly last year, also Europe. Obviously, we came out of COVID much earlier than some Asian markets. Yeah. And it was very positive.
Revenues? Are you a billion-dollar company now in terms
Not
of
yet.
revenues?
We're very close.
Okay.
We're very close, but I guess we'll manage this in the next 12 months.
Well, what's the outlook these next 12 months compared to last year? What's your initial gut feel because of this reopening, but also a slowdown somewhere else too, in other parts of the world? Right?
Obviously, China is very good news. As you know, China represents 30% of the luxury market. Greater China even more. So this reopening is obviously very good news. We don't know how much the Chinese will consume locally and how the tourist business will develop. I think the tourist business, which is very important for some countries like Switzerland in particular, will take some more time. But local consumption, because of the savings, obviously there must be huge savings now since Chinese consumers haven't consumed that much over the last years, must be huge. And we've seen that last year also in Europe and the United States, how much I would say catch-up consumption there was.
Do you see China taking back that position as the top export destination for Swiss watches, taking it from the U.S.? And would the reopening do that, you think?
I think it will take a little bit of time. We have to, again, we have to see what the local consumption will be. But we're very confident and quite bullish also in terms of investments.
Without naming names of your peers, are you prepared as far as supply is concerned? Because you'll probably know, of course, you walk into certain shops, Aldi for display, you ask to buy it, it's nowhere to be found.
Yeah, well, the crazy thing is we are not, in electronic industry, so we're not talking about chips like for the car industry. In our industry, it's a very old industry. It's a 250 years old industry. It's really about capacities. It's really purely simple capacity. And the watch market has been growing so much that our capacities are limited, the capacities of our suppliers are limited, and we all, at least the very successful brands, are just suffering from capacity issue, from industrial capacity issues, but not from a supply chain.
Temporary.
What sort of trends are you looking at here right now? Do you think that the market's going to move beyond just steel sports watches or chronographs, the like, or more dressier watches? And what about for female sort of consumers?
The Chinese market is as developed now as in other countries in the world. So the culture, the watch culture or the luxury culture is there. We have invested as an industry so much money that the knowledge about our products is there. Of course, little less in third tiers and fourth tier cities, but even there. And then you have all this overspill of social media from abroad, which impacts also Chinese consumption. So I don't see that much of a lack of culture and understanding. So my point is the market became global. So whoever buys in China or in Hong Kong buys the same product in Paris or in London.
Precisely.
So we are really in a global market. And to respond to your question on females, this roughly, of course, because of the population, the female market is roughly 50%. And it's also developing strongly, but it's the same trend all over the world.
Sure.
I mean, you've been in this sector for some time, and I'm wondering how the manner at which brands like yourself market and communicate to the Chinese consumer. I'm sure that's strategies also evolved throughout the years, and I'm wondering at this point in time, how are you talking to your consumers? Do you even have to market yourself? Is another question, I guess.
No, of course, we have to market ourselves. And we need to find the right mix between, I would say, especially when we talk about celebrities or testimonials, Chinese and Western celebrities. As you know, we work with Brad Pitt, with many international celebrities, but we need also to invest in Chinese celebrities. And then the big thing is social media. Today, up to 70% of the decision making by consumers is done through social media. So we have to invest much more in social media than in print advertising, for instance. And we also invest a lot in outdoor advertising.
Are you in acquisition mode right now, especially after this reshuffling of ownership?
Maybe.
A difficult question. Being an independent company, I think, is somehow reassuring also for the retailers. For wholesale partners, we have two great private equity partners, CVC and Partners Group, who now took the majority, 51% of our business just on the 23rd of December.
That's right.
We obviously, Breitling has a huge potential to grow, in particular in China. We've been one of the fastest growing companies of the last couple of years and will continue to be so. And then, we'll see what destiny will bring us.
Well, what I was going to ask you what your growth metrics are, because you mentioned something about you're constrained to some extent by capacity, and I'm wondering, is that something that you're urgently looking to address, or is that almost also a blessing, really, for you to be able to do that sustainably? And now that you have, of course, this change of ownership, how much pressure are you getting to deliver great growth as well?
No, we have very good investors. They understand our business. They understand the constraints.
Yeah.
We grow not only in volume, we grow also in value. Okay. So our average price did increase over the last couple of years. We have more in-house movements, more products for the female market. So it's both a growth in volume, but also growth in value, more complications, etc. So these are the matrices. We're a very profitable company. It's important for private equity that we finance ourselves with the cash flow we generate. And this is also the way forward.